So this is a little overview of what we're going to do today. We're going to have a brief introduction. Then we'll talk about, are you ready to buy a house? What the lending process actually looks like, how you find a home, and what the home buying process is. We'll go through step by step how to do all of this, and then you should leave here with better, fuller knowledge on how to buy a home. This is meant to be interactive, so if you'd like to ask questions, just ask questions, throw them out. We are happy to answer them. So I introduced myself. I have two of the most amazing realtors in Bastrop County here. I am so fortunate to work with these ladies. Our firm is a people-oriented firm. We are very interested in making sure that people's needs are met and that we honestly don't look at the numbers. We look at how we have impacted people's lives, and that's our goal. And these two ladies are paramount to that. So with no further ado, I'll have Delacy introduce herself and then Brayley.
Hi, I'm Delacy Martin, and I love real estate. I love helping people. That's why I love real estate. And I consider myself a holistic realtor, which is not two words that you hear together a lot. But like Rachel said, which is why I'm with her as a broker, I don't look at the numbers, I look at the person, and I look at the person's entire life and what really is best for them as a holistic approach. So thank you so much for having me. It's an honor to be here, and I look forward to, answering questions and helping you all.
And this is Brayley.
Hi, I'm Brayley Foreman. I'm a little bit newer to real estate than these two here, but I also have a passion for helping people as well as the right fit for the right person, understanding people's budgets, limitations, what they need in their lives, and really just fitting the needs and meeting people's, expectations and exceeding that with where their new home is going to be. I find that, so much of our personal life is spent at home, so let's make it a good one.
Yes, exactly. And so with that, Brayley is going to talk to us about determining if you're ready to buy a home. Can you see that screen?
I can see it a little bit, but I'm going to do a little bit here, so I'm going to kind of do a little bit.
So there you go.
Alrighty. So when you start talking about home buying, a lot of people get scared because of the big numbers, right? That's a big purchase. You think to yourself, oh, I'm spending, this amount on rent, but this amount of a whole purchase of a house looks big, right? I like to tell people to not let those numbers scare you, because when you're doing renting, you're spending money on someone else's investment. When you start to go into buying, that's your investment. So you get to retain that money into your equity of your home, right? So you have to start to look at what that looks like. And, we start off, let's see, next slide here, move over here. So a lot of what you're gonna look like of when you go from renting to buying is how you're gonna get that loan, right? Who's gonna give you the opportunity to lend the money to purchase the home. What they're gonna really wanna see from you is steady income. Have you been working at the same place for 2 or more years? How is your job there? What is your income from that employment? And are you a low risk lender? Are we going to lend to somebody who's probably going to lose their job? Maybe not. You want to be a solid employee. You really want to have solid income coming through. Also consistency, right? You want to eliminate any gaps in not having a job, any gaps in not paying bills on time. Credit comes into play as well, because they're going to pull up that as a reference of your ability to pay. So what can you actually realistically afford in your financial health? What are you bringing in, and how can we help you position to the right pricing? Next, we're going to go to debts, right? Because with that, you have what you're paying each month and then what you have to pay. Your debts, whether they are credit card debts, your vehicle that you drive, anything that you're paying monthly expenses to, they're going to consider your debts. And you can always calculate your debts by pulling up your credit report here. We've got this nifty little link that will pull up the credit bureau website. This is the only one that will actually give you your legitimate credit score for free online. Everything else is kind of just pulling, and that's why you'll get such a different number from when they hard pull and to where you're looking at Credit Karma and you're like, why is this not the same number? Because they don't have the same flow of information that this site would have for you to give you an accurate pull of that number. So that's something you do want to be checking in on. What do you have on your debt side, and how can you start to work that down? And credit challenges, if you do see some challenges there, you might need to clear up those blemishes before getting so many hard pulls for loans that will bring that score down. So you really don't want to pull too many times if you're working to build better credit as well. Alrighty, and then on down payment and closing costs. So with down payment, you will need between 3 to 20% of the purchase price of the home. And that depends on the type of lending that you have and the type of company that you go through for that lending and the loan itself. They will go through your financial history with you, your financial health, and kind of determine what loans they can get you in with what rates and how much you would have to put down. There's a lot of first-time home buyer assistance programs, there's grants, there's a lot of opportunities to kind of get that down payment together. So there's assisted payments, T-Shack is one of them, I know for sure. There's many different options that your realtor as well as your lender can kind of guide you towards in that. And then closing costs, what are you paying in cash at closing? So that's something that you have to think of as well, right? So that can go anywhere between the price of your agent, whether that's worked into the contract or not, down to repay.
The most common types of mortgages. So conventional is what people have grown up with in the United States. It's the old, you gotta put 20% down and buy a house. The thing is about conventional mortgages though, is that's changed. Now, conventional mortgages offer down payments as low as 3%, which is phenomenal. The Federal Housing Administration and the VA offer mortgages as well, but they're actually not offering the mortgages, they're just insuring them. So they're taking mortgages and making them less risky for lenders. So you work with the same lender, whether you get a VA loan, an FHA loan, or a conventional loan. There's also another type of loan called a USDA mortgage, which is offered in Bastrop County, and that's a 0% down mortgage. That one's really interesting. You have to have really good credit, but you don't have to have super high income requirements, and you do qualify for 0% down with that mortgage. Definitely something to ask your lender about. Some of the lenders here offer it, some don't. What do you think is the number one mortgage offered or used for new home buyers in the United States? What do y'all think?
Conventional.
You would think, but it's FHA. FHA, because a lot of people really like that 3.5% down that you can get with FHA. You can have a slightly lower credit score with FHA. You can have slightly more debt, so that debt to income ratio that Brayley was talking about can be pushed a little bit harder. What they're looking at is your long-term success in a house. And they're seeing that your picture right now shows that you're tight on your budget, but we see that your income goes up over time and that your debt payments go down over time. And they use that information to basically insure a loan. So we have 0% down with USDA and VA. We have 3.5% down with FHA. We have anywhere between 3 and 20% down for a conventional loan. And then there are special programs like the Texas Department of Housing and Community Affairs offers a 0% down subsidy, which basically turns your loan into a 0% down through a grant. And then programs like Chase Mortgage, which offers you between $5,000 and $10,000 to cover the cost of your down payment for a new home buyer. So there's lots of options. It's super important to meet with a lender to figure out what's best for you. Now, here's something a lot of people don't know. I think Nicole knows this though. Did you know that when you buy a house with an FHA, VA, conventional mortgage, your house doesn't have to be a single family house. You can buy a duplex. You can buy up to a fourplex. You can buy a piece of property that has 3 homes on it. And you can rent those out for income. If you can show that you have a dedicated lease or a dedicated person who's going to be willing to lease that extra unit when you close, you can apply 70% of the income you're going to get from that towards your income when you buy the house. So for example, say you make $35,000 a year, but you found this duplex and you and your lender did the math that you can afford it, and you know some people who are looking for a place to rent and they've committed to renting from you, 70% of that rent goes in towards your income for your qualification. So your qualification goes up a little bit, right? Your income goes up a little bit. It's perfect. Yes.
I've seen a few fourplexes and things like that where they already have standing contracts.
Yes.
And they're willing to keep like the persons are willing to stay in the property, would that count towards that?
Absolutely. I've sold a couple duplexes on the hill that way. There were people who were already living there. They had existing leases. When you buy a piece of property, just side note, when you buy a piece of property and you're buying something where somebody's renting, if they have a lease, you have to honor the lease. You can't break the lease unless you and the tenant come to an agreement. So they have a right to stay in that home during their lease period. Well, that right helps you, right? Because that also shows that you're going to have that income source. So it's a super creative way to offset the cost of housing and start building income. On top of it all, if you buy an investment property, the IRS lets you depreciate the value of that asset. So the asset's going to appreciate in value. It's going to become worth more and more and more. But the IRS lets you take a little bit off every year from your income as a depreciation for that. So it is a win-win. If you can afford it, if you can't, that's okay too. It's just something to think about for the future. Okay. Lacey's going to talk about how we actually find the home.
Finding a home. Okay, so first of all, does anyone have any questions about the financing and lending part? Just want to give an opportunity for that.
How long does the pre-approval last while you're searching for the home? Once you get pre-approved, is there an expiration on that?
There usually is an expiration on the interest rate that they approved you for. So it depends on the lender. I think it's usually 60 days. Is that right? 60 days that your interest rate, is what you're approved for. When you and your realtor find the home you like, your lender is going to issue a pre-qualification letter that goes with your offer packet, and that'll have your interest rate on it. And that interest rate is locked in by your contract. So if that contract takes 90 days, your interest rate won't change in those 90 days. With the exception that if the interest rates drop, your lender will usually honor that and drop the interest rates. But in terms of your pre-qualification, it's usually about 60 days. And it's just related to interest rates. It's not necessarily related to your figures. Usually they'll just renew it and issue another letter. They won't actually make you go back through all the documentation and all that again. That's actually a really good question.
Yeah. Yes. Awesome. Okay, so we've gone through all the things until finding home. Several things there. And then you're ready to find a home. So now you have your budget, you have your amount locked in, and then it's time to start thinking about tons of different, nuances and where you're living. So many people I see and talk to that are like, when I buy a home, it needs to have X, Y, and Z because that's where I'm going to be forever. And the reality is that homeownership really doesn't work that way. And it's really quite amazing how the sooner you buy and maybe make a sacrifice of what you really want, that's going to lead you faster to getting that home that you've always dreamed of. Waiting and waiting for the right home can so turn around and end up biting you, right? I have so many friends that when they were in their 20s maybe could have afforded to, put money down on an inexpensive property that was maybe in a bad part of town, maybe in East Austin where they didn't really want to live. But if they had done that then, now they would be in a totally different position. And so kind of the thing with homeownership is the sooner you get into it, the more equity you're going to build. And like she was talking about, it keeps appreciating and appreciating and appreciating. And that is like a savings account almost that you can use to then upgrade your house and get into the home of your dreams. People, unless they're very, very wealthy, do not buy their dream house on their first house. So I think that's something really important to think about when you think about finding a home and finding your first home. So you're going to look at a mixture of different things. You're going to look at, of course, where the home is located, how much it would cost you to get around, get back and forth to work, and also a long-term investment, right? So how desirable will this home be in the future? I'm sure many of you have lived multiple places, and how much you were paying for somebody else's mortgage that then they get to cash in the future. Now that becomes in your hands. So you can think about, is this a home that anyone could buy, or is this home only work for a couple of people? For instance, a 2-bedroom home, maybe that's all you need. But if you go to sell it in 5 years, it's going to be a lot harder to sell than a 3-bedroom home would be, because almost anybody can move into a 3-bedroom home. Even someone with 5 children could make 3 bedrooms work. They cannot make 2 bedrooms work, right? So those are just some different things to consider when you're buying a home. You also want to look at your realtor and pick your realtor wisely. You know, for a long time, I feel like realtors were like, this is an executive kind of business, and we all need to wear suits and ties and look a certain way. And really, I think that as a holistic realtor, I feel very differently. You know, I can wear whatever I want and put on a show, but really, buying a home is an emotional process. This is where you're going to spend most of your time. This is where you're going to sleep every night, play with your family, you know, cook all of your meals. And so basing that on an executive kind of person or relationship, I personally don't feel like is the best use of a realtor. Because a realtor is going to go through so many ups and downs. When you're dealing with this big of a purchase, you know, for an example, you find the perfect house you want, and then somebody else comes and offers a little more than you and gets it, and you're crushed, you're upset. How is your realtor going to react? Is their first instinct the money and the negotiation, or are they thinking about you and your well-being and how emotionally well you are to continue the process? So that's just something that is really near and dear to my heart that I think is not talked about enough, maybe in the real estate realm. So then there's several places to find a home. You know, now anyone at any time of the day can go onto Zillow or Realtor.com, and you can just look and look and look and search for homes. What a lot of people don't know is that not all the homes that are online are actually still for sale. Not all of them ever were for sale. Sometimes people scam people through those and do different things like that. And that's where having a skilled realtor that has your back is really handy, because they can say, oh no, that's actually off market, it already sold. And then you're not kind of just spinning your wheels, wasting, you know, your valuable time looking at things that maybe you can't get. So then you find a house you love, you put an offer on it, and you get that house. So we're going to go into that process and what that really looks like. So when you find the house that you love, right now we're in a buyer's market. So it's a really great time. Buyers have more sway right now than they did just a few years ago. You know, during 2020 and 2021, it was like people were offering astronomical prices over the asking rate. It was really, really hard if you didn't have a lot of cash to compete with. And now that's just not the case. You know, if you come in with a loan that's going to take longer, but it's a solid loan, people are going to be much more likely to accept that. Sellers are going to be much more likely to give concessions and give you things that you ask for, because they need to sell their home and move on, and you're a qualified buyer. So they don't have 6 or 8 buyers to choose from now. They have only you. So they need to make it work. So that's what a buyer's market really means, and that's where we're at right now. So once you go under contract, your agent's going to bring up all sorts of things. They're going to look at the market value. They're going to compare it to other homes in the area. That's going to determine what price you will offer them. Also, maybe they're offering, or maybe the house is $300,000 and you have $5,000 to put down. You can actually ask for concessions back at closing for some of your cash sometimes to put down, which I think is a really cool thing. So all of that is wrapped into the offer that you're making them and into the contract. So then you're going to go, so now you're under contract, and the first part of being under contract is going to be the option period. So an option period is a period of time that you pay for, and there's no set amount, but we kind of have industry standards of what is standard and what we normally would do. So on a $300,000 home, I would say my personal standard would be $300 for an option period of about 7 to 10 days. If the house is in much better condition, I'll say, hey, we can do 7 days. And in that time, we're gonna look at all the things of the home, have an inspection, and make sure that this is the home you wanna buy. If the home was in really bad repair and we knew that it needed a lot of work and they disclosed that it needed a lot of work, We might use that same amount of money, but ask for a longer period of time, a longer option period. During that option period, you can actually back out of the contract at any time. All you lose is that option money that you put down. So for $300 in this case, you could look at that home for 7 to 10 days, and if you decided to, you could totally back out. Now, it doesn't have to be because something's wrong with the home. Maybe you find another house for the same price that you actually like more. It's still within your right to back out of that property for any reason. So during that time, you're going to do all the inspections, as I noted, and then it's really, really important that during that option time, you negotiate any repairs, because that's still your time to back out of the contract with only paying, now you've paid for the inspections, of course, and the option period money. Now, when you have that, if you go a day over, then it's into something else called your earnest money. So your earnest money is money that you put down that says, I'm gonna buy this home, this is the money I'm putting down, and if you leave after the option period is over, they have the right to your earnest money with one other condition, or, that's the word I'm thinking of. Yes. One other caveat would be just if you, a lender approval. So you'll get a certain period of time that the lender has to say that you are or are not approved for the loan before you close on the house. This can be anywhere between 10 and 30 days, and that can change your offer. So when offers were really competitive and it wasn't a buyer's market, some of us were being like, okay, we'll get that lender approval in 10 days, you know? But now 30 days would be a really common, normal thing to do. So this actually protects your earnest money up to that 30 days. So say in this case, the earnest money as an industry standard that I use would normally be $3,000, and that will go to the purchase price of the home. And then the $300 is option money. So after the option money is over, let's do 10 days for a round number, then that $3,000 earnest money kicks in. And so if you do not get approved for the loan at the end of the 30 days, you would be able to get that earnest money back. If nothing like that happens and you're approved for it, the property appraises, and you don't negotiate anything else during option period, you're going to be locked in. And if you back out, you can lose all your earnest money. So, and that usually for people, that's also their down payment or a chunk of it. So during that time, you're going to get all your financial documents to your lender, and then we talked about the finance period. After that, you're going to get the title commitment. So all of this is going to go to a title company. That's where your option and earnest money is going to go. No person is out there holding your money. It's in something called escrow, and they have certain accounts that they put that in and hold it in so that it's safe and everything is legally above board. During all of this time, the title company is searching all the title documents, and they're looking at surveys, they're looking at how the property was built, they're looking at all the things to make sure that what you're buying and what you're purchasing on the title match together. So let's say somebody had a lien on the property that they never paid, and then somebody else took them to court, and then they put a judgment against the property. Well, that person would actually have to get paid before you could get the title. So these, and you know, sometimes the title company can reach out to them and say, hey, can you get paid at the closing of the house? Sometimes that doesn't work. So these are things that the title company is going to do, and they're going to ensure that your title is free and clear and that what you're buying is actually what you have the deed to. Yes?
Before you move forward, can you explain what a lien is and a deed, and how that is a problem during that process?
Yeah, absolutely. So a lien would be money that is owed on the deed. The deed is actually the paper, I guess, and the document of this property. And so we used to have, a long time ago, it was like from the creek to the tree, and those were meets and bounds. And now we have surveyors that really go and do things to the inch, so we know exactly where this property is, and then where the structure on the property is, if there is one or multiples of them. And so the deed is going to outline everything that's there, and then if there are any restrictions on the property, the deed will have that as well. So this is a really, usually like a binder or like a kind of like a spiral notebook that they make of all of these things that can be included in the deed. So it's really important that you go with the title company that you trust and that your realtor works with, because if something goes wrong in title, that's, it can really mess the whole deal up.
Mm-hmm.
And then the lien would be anything that's owed on that deed that needs to be paid. I've even seen this happen for solar panels. And, somebody owes money because they put solar panels on and it hasn't been fully paid. Those will need to get paid unless the person buying the house can also take on that debt. And it's really tricky to take on debt at the same time that you're buying a house. That's like a big no-no. And so that would be another example of one of those liens. Does that answer your question? Awesome. So then, let's say you get through option period, you negotiate, the roof had a few shingles missing, so they went ahead and fixed those. You're under contract, everything's going along, you've been approved by your lender, title company has sent back title paperwork, they're like, you're good to go. And then it's a couple of days before closing. So you're gonna go with your agent, usually they'll have a piece of paper, and you're gonna do a walkthrough. And you're gonna make sure that the property is clean, it's in great shape, and it's really how you expected it to be right before you moved in. It's really important to do this more than one day before closing. That way, if there's any big surprises, there's a little bit of time to get that done. And this is where having a good real estate agent is really gonna make a difference, right? Because the real estate agent's gonna be in the background talking and communicating with everyone to make sure everything's in alignment and everything gets done. And if you have a good agent, there's a saying that an agent that was an agent for 40 years told me. She was like, if you had a stress-free time buying a home and you felt like it was just so easy, you didn't need an agent, that's because you had a great agent. So that's a really good thing to remember. If home buying feels easy for you, that's because you have a great agent. That doesn't mean that an agent can protect you from everything that can happen, but they should be able to shield the emotional issues going on, bring you the truth, and then help you work through things emotionally while maintaining the deal that's going on. So you'll have the final walkthrough, then you'll meet at the title company usually for the closing. You'll wire money, and there's a bunch of stuff about wire fraud warning. So everyone's really aware of that. I had actually one time a client was like, hey, you told me not to wire money. I'm not gonna wire money. You sent me a wire fraud warning. So the wire fraud is a pretty big deal in the real estate industry. And so you wanna make sure anytime you're wiring money in a real estate transaction that it is going to the title company. You talk to the title company first. Everyone knows that you're wiring money. You wouldn't ever wanna just open an email and send it. You wanna talk to a real person before you do that, and make sure you talk to your agent. And then you receive the keys when you fund. So let's say you go to the title company, you've done your walkthrough, the house looks great, you go and close, and it's 4 o'clock in the evening, and your bank that you got the money from does not give them the money that night. You don't get the keys until they actually get the money. So you would get the keys probably the next day. It usually doesn't take more than a day. And some people I've had close from another country, many hours difference, and sometimes that would take a few days to do. So that concludes that, and I would love to answer any more questions. I'm sure all of us would.
Happy to answer any questions you have.
I know that was a lot.
Yeah. There's a lot. The thing is I'll say, I think you really hit the nail on the head. It's real estate has traditionally been seen as a business and a corporate business, and you see people on TV in their business suits or cutesy suits, and they're all like, it's just business. But the thing is, you're being asked to spend between $250,000 and $500,000 on something for your life. This is an emotionally important investment. So it's really important when you go through this process that you feel connected to the people who are helping you. Not just your realtor, but also your lender, even your title company. It's super important that the people that you are working with respect your values, listen to you, give you information in a timely manner, and really support you. So I would encourage anybody who is considering a real estate transaction, whether they're buying something or selling something, what I always say is try to interview at least 3 realtors. More if you want to, but try to interview at least 3. We are used to interviewing for jobs. It's not a burden for us. We like to go and talk to people. That's kind of how we are. But we like to show you our value and show you how we can help you. And it's important that you meet with people and find the ones who are right for you to help you based on your needs. So
I feel like that's so important because everybody has a friend or a cousin or an uncle, but it's like maybe that cousin isn't going to be the best fit for you. And so really taking that into consideration and being like, no, I need to find the person that really I feel the most confident with and that I think will work the best with me. That's so important in buying a house.
When it comes to communities like ours here in Smithville, what are the challenges you often see from buyers, whether it is lack of information or any other challenges that you often see, like they're common for them either before or when they're trying to buy it or when they're just checking the market to see if they qualify?
My biggest thing is, sorry.
No, go for it.
I see people that are scared to talk to lenders. You know, we had lending before the home buying process for a reason. And lending is the first step. It can be really scary to go talk to a lender, but if you don't talk to a lender, you're not going to get a real overview of where you're sitting. And even if the lender says no, they're not just going to say, no, go away, we don't want your business. They're going to say, here's how you can, pave your way to homeownership. And without that knowledge, you're never really going to get from point A to point B. So to me, that's the biggest hurdle for so many people. They're just like, I'm not ready yet. I'm not ready. I know I'm not ready. I know I won't qualify. But it's like, you need to go to the lender and talk to them, even if you feel like you can't qualify, to get the information that you need to get to the step ahead.
I think there's a lot of fear about sharing your financial information, especially if you've had challenges in the past. And I just want to tell you that all of us, lenders, realtors, title company, have all worked with people with such diverse financial backgrounds. And we have found homes for people with the most amazing diversity and how they've come up with income, obstacles they've overcome. It's just so important that you realize that we're here to advocate for you, not to criticize you or judge what we see for the numbers. It really is about how can we advocate, how can we make this happen. And what you'll find with lenders, like you said, if it's not the time, they will help you develop a plan for the time. They really will. It's amazing to me how many people say, I just can't qualify. They go meet with a lender and they're like, I have a 6-month plan. And in 6 months, they've literally paid off that one car that was almost paid off anyway, and are making the lowest payment on their credit card and are, saving an extra $100 a month, and boom, they're qualified. That's the other thing I would highly recommend is that if you are beginning this process, go speak to the lender first before you make decisions about your credit. Reason being that sometimes paying off all your debt could hurt you in the pre-qualification process. So they can help you create the formula that's going to give you the most success. So I would definitely do it. Now in Smithville, something interesting that I've seen with home buyers here is not knowing how or where they want to buy. Like, it is an interesting town for people. Like, do you want to buy in the Hill? Do you want to buy in like central Smithville? Do you want to buy near the highway? And there's a perception that homes are super expensive in Smithville because we see a lot of these new construction homes that are just $900,000 to $1 million. But there are actually a lot of homes that are really good price in Smithville. Nice, solid, beautiful homes on nice lots. Great for lots of different.
A lot of newly renovated ones as well.
Oh,
from
yes.
the older part of Smithville over here.
Yes.
I've seen several. Maybe last summer, I believe there was some showings that I picked up for people over here. A lot of older, on these older blocks down over here, they're starting to really renovate some of these houses here in Smithville, which would probably be some, good spots for people to find some hidden gems. To piggyback off of what Rachel and Delacy were saying, even just as far as like the agency process, I think it's important for people to understand with that it's literally our job to be on your side. You know, I think that like understanding that, and you've got to really work with someone who's like, they are on my side. They are for me and for what I need, whatever that may look like, you know. So tackling that big purchase and that next step in life for a lot of people, you know, we're in an age where some of us will be the first homeowners in our families. That's a really big emotional step to take and to take onto yourself, you know, and understanding people who really have your back and support you through that is really important to us.
I think also what I've noticed from people is they don't realize the realtor doesn't get paid. You don't pay the realtor. A lot of people think if you're buying that you're the one physically paying the realtor like by the hour or whatever.
It's negotiated, it's not by the hour, and that is something that people don't understand is how we get paid, right? And that is something that is always negotiated. It really depends on the house that you purchase and the contracts that are set in place. So every agent is going to tell you what their fee is when you hire them, right? They're gonna let you know up front, this is, you know, my typical fee. They are always negotiable. We can work things out depending on the type of deal we're looking at, right? And from there, the buyer says, okay, I agree that you will be paid this amount. And some sellers will offer it, some sellers will offer a portion of it, and some offers will offer none of it. And it's up to me to make my due diligence on what I'm gonna have to cover if they don't. And that's how that works. So you may come to a home where they're gonna pay the full buyer's, you know, expense because they want that house to sell. They want to say, hey, bring your buyer here, show them my house. I'm willing to pay you for the work of this so that they don't have to come out of pocket on it. And there's other places will say, okay, I'll meet you halfway. I'll meet you in the middle. I'll throw you 1%, I'll throw you 1.5%. And there's others that say, you know, my house is great. I don't feel like I need to pay the buyer's agent. If they want an agent, they can pay their agent because my house is wonderful and somebody's gonna buy it. Some people do think that way and operate that way. So it really is always negotiable as far as what we get paid at the end of the day. But it isn't an hourly pay, and that's what people don't understand, you know? So sometimes we might be in a conversation for 4 hours, you know, tugging back and forth, or 4 messages here, and then 5 messages there, and then 6 emails here and there, going back and forth in the back end of things. And there's no time frame on that. You know, if it takes you 3 months to buy a home, it took that agent 3 months of back end time, of pretty much almost every day touching that file. So those are things that a lot of people don't really think of when they think about our compensation. So for us, it's most important that we don't think of it as like an hourly job, right? That we don't think about it in the time dedicated to each individual sale. It's kind of all got to come out in the wash because it is something that we're doing as an advocacy to the buyer.
I also want to say, you know, since we're talking in a first-time home buyer class, there has never been a better time to be a first-time home buyer. And I know that, I said this at the beginning, it seems strange because you hear interest rates are really high. I will tell you, you know, interest rates are in the high 6%, low 7%. In the grand scheme of things, for the last several decades, that's actually a low to moderate interest rate, okay? It's higher than what we saw during COVID, which was phenomenally low. And anybody who did get a mortgage at that price, bravo, because it's amazing, absolutely amazing. But those interest rates now are at a point where it's considered normal. Having said that, real estate is cyclical. You'll have markets where there's more sellers than buyers, and you'll have markets where there's more buyers than sellers. Right now, we have more sellers than buyers. That really causes an advantage for the buyer. Like Delacy said, that means that, you know, they're not looking at 7 different buyers coming to the house. They're looking at you and how they can make it work. There is room in a real estate contract for the seller to help you pay your closing expenses. There's room in real estate contracts for a grant to help you pay your down payment. If you have pretty solid or emerging credit and good income, like a regular paycheck, highly encourage you to start talking to a lender because there are mechanisms in place so that you are not paying much out of pocket in order to get a house. You're paying a lot, in terms of your mortgage and your monthly payment, but that big first cash number that is so scary to a lot of people, it can be super low right now. Super important to talk to your lender, have them help you figure it out. There's one of the lenders who lives in Smithville is I think one of the most successful lenders in Bastrop County, offers the grant program to help with the down payment assistance. So super good time. On top of it all, if those interest rates do go back down again, maybe they will, you can refinance. You can capture that interest rate, save that money in the future. But in the meantime, you're growing equity in your home.
Mhm.
And I think what people don't think about is, what if those interest rates just go up?
Yes,
You know, it's that we have the possibility for that to happen too.
and that's actually happened. The people were not wanting to buy a house because interest rates are up to 5.5%, and now
No, they're coming.
yes,
So,
yeah, it totally happened. It's all tied, and I'm sure you guys know this, but it's all tied to inflation and how the economy is doing and how indicators are doing. And then when the Fed meets and sets the interest rates, it directly impacts the mortgage market
And the jobs,
and jobs.
right?
Yeah.
It's like a huge factor, is how many people are working and how many people are employed.
Or any other questions? Yes.
So you talked that we're in a good interest rate right now. We're not too low, not too high. What was the high at one point?
Well, in the late 90s, it was up to 13%. So,
Hmm.
yeah,
So the credit
it's
card-
kind of been all over the place. Yeah, and then in 2021, it was down to 2.75, 2.63, around there. So, huge range. Yeah. It's interesting because had we never had that super low interest rate, I don't think people would be so nervous about buying right now.
Mhm.
That's true.
It
Yeah.
kind of scared a lot of people who, I mean, we have several friends who are right on that cusp and could easily be owners, and they're just so scared. They're just so waiting for something drastic to change in the market, which just isn't realistic, right? Because they have such hopes of like another COVID, of everything just going to nothing, and being able to just like be another grab. But again, that's something that they don't understand, because during that time, people are offering so much more over what asking is, that you're having to realistically look at homes that are priced lower, because you have to expect for the overbid.
And if that interest rate does go lower, you can refinance. I mean, if you qualify, you can refinance your home. And qualifying for a refinance is often easier because you have more equity in the home. So your debt to income ratio is impacted. You know, a lot of the time when people buy a house, their income goes up over the life of the home. Their debts typically go down. I mean, a lot of the time. There's exceptions, of course. So you've got a stagnant monthly payment you're paying for your house, you know, plus you have changes in taxes and insurance. But when you rent, that change happens with your income. When you buy, your payment stays, but your income goes up. So over time, in theory, you're gonna have more available to use for whatever you want than if you rent.
I also think it's important because we talked a lot about percentages, like having 3% to put down. But what that looks like, because we deal with percentages every day. So I don't know what you think when I say 3% of $300,000, but that's $9,000, right? So if you can save up $10,000 and you have a steady job, you can be a homeowner. That's the reality.
Or we maybe even qualify for a grant for
Yeah.
a lot less.
And then have, enough to do
Or
move-in repairs.
if you
don't have
have
to
great
use
credit, you can do USDA, because all of Bastrop does USDA. And even with low income, you can qualify for a home with zero down.
Yeah.
So there's a lot of ways to get there, but if we don't have the conversations and we don't talk to lenders and we don't talk to agents, we don't find out those ways.
And I guess I'll just put this out there in case anybody asks or if anybody watches the video. If you are a veteran, you'll receive a letter with what your entitlement is. You just multiply your entitlement times 4. That's usually what you can qualify for a 0% down.
That is true. And then after 3 years, you can do it again.
I have a question. I don't know if y'all have already addressed this, but how can someone who doesn't work traditionally prepare to buy a house for the first time? So someone who their finances ebb and flow, they're entrepreneurs, maybe like early stages, or just never found like that consistent groove. How could that person prepare?
There are loans, so I mean, we're the perfect example of that because that's what we do.
Yes.
So there are loans that are based on your bank account statements instead of your paycheck stubs. So they'll usually pull between 2 and 5 years of that. General rule of thumb is if you're a self-employed entrepreneur, and you're trying to qualify for a loan, you need to show about 2 years worth of stable income. Stable doesn't mean monthly, stable means yearly income. Usually.
Yeah, and they'll usually look at your taxes as well.
Yeah.
So I tell people too, because a lot of entrepreneurs try to get as many write-offs as they can, but those 2 years leading up to buying a home, you want to be, maybe investing a little less in your business and retaining a little bit more of your money. That way you can have a little bit better taxes to show to the bank.
Thank you.
You mentioned that it's a buyer's market right now, but it's cyclical. Like, how long are we looking in past history? Like,
We were
how
supposed to be
often-
finished with it already, so.
Oh.
It just changes with inflation, jobs, politics. They're all tied to the markets. In the Austin area in particular, when COVID happened, there was a huge shortage of homes. So home builders from all over came in and just built an oversupply of homes. And there are other large markets in the country that have recovered and they're more balanced and it's not as much of a buyer's market, but we're still a buyer's market because of that excessive inventory of new homes. And side note, realtors can also help you with your new home purchase too. And I highly advise you to have a realtor help you with that. If you go to a home builder, they almost always will negotiate with the realtor to pay the realtor, so you don't have to worry about that typically. But there's an inspection process that we can help you organize with new home construction. And we can definitely advocate for you if any corners are cut or anything like that. So side note, any type of real estate you get involved with, I would highly recommend you speak to a real estate agent.
Also, as an entrepreneur, we deal with a lot of commercial too, and finding small businesses, local places. I do that a lot in Bastrop proper. So that can be a really great thing too, instead of feeling like, oh, I need to find an office or I need to find a place. Like, you don't have to do that alone either.
Beautiful.
Well, thank you for
Thank you
having
so
us.
much.
We have some business cards up here. Welcome to grab them. We'll shoot you a one-time email with our information. That way you can contact us if you have any questions. Reach out to any of us.
Thank you so much.
Thank you.